Hi, this is Monty Agarwal for Uncommon Wisdom Daily. As most good investors know, equity valuations are based on two main factors: earnings and multiples. Earnings are relatively straightforward. If a company is making money, its valuation and stock price go up. If it's not, its valuation and stock price go down. Multiples are a little bit more complicated. The most popular metric is price to earnings, or the PE ratio. It's calculated by dividing a company's market value per share by its earnings per share. In other words, it measures the future growth rate of a company's earnings. The better the prospects of earnings growth, the higher the PE ratio. We can also apply this indicator to a country's entire stock market. For example, if GDP is growing at a rate of 3% a year and is expected to remain at 3% for the foreseeable future, the stock market shouldn't really be expected to grow more than faster than 3% growth either. But if a country's GDP is growing at 3% and is expected to accelerate in the future, then the overall PE ratio of the market will also rise, along with the stock prices. Now, there are real-world examples of this relationship all around us. US economic growth has plateaued over the past decade. So, while we have seen big ups and downs in the S&P 500 during that time period, the market is at virtually the same level it was 10 years ago. Meanwhile, economic growth in Asian markets such as China exploded in the early part of last decade, leading to higher PE ratios and rising stock markets. But over the past couple of years, GDP growth has slowed down, and that's why the Asian stock markets have been relatively moribund lately as well. However, it's a completely different story in the so-called frontier markets of Eastern Europe, Latin America, and one of my favorite regions, Africa. These markets generally are not followed by Wall Street analysts or the mainstream media, but quite a few of them are hidden gems. I believe growth in the frontier markets is just starting, led by demographics, newfound political stability, increased spending on infrastructure, foreign investments, demand for commodities, increased efficiency in production, better education, a more productive labor force. Basically, the list goes on and on. As economic growth in these markets keeps expanding over the next few decades, the stocks will see higher PE ratios, leading to the potential for outsized gains in their stock markets. Of course, some frontier markets are better than others. In addition, there are always hidden dangers that can derail economic growth, and these economies are especially prone to external shocks such as downturns in the global economy. That's why it is so important to find good sources of information who can warn you about possible pitfalls. In fact, members of my Rapid Growth portfolio are invested in the frontier markets of Africa through a fund that has more than 50 analysts on the ground in every country. My subscribers are also reaping the benefits of the African growth potential, and I believe their gains will be even greater in the future. I'm Monty Agarwal for Uncommon Wisdom Daily, and thank you for watching.